Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman, and let's get to the three things you need to know today. First up, U.S. stock futures holding steady this morning as investors await the latest trade news from Washington. President Trump posting late last night that he will unveil additional tariff letters to trading partners as soon as this morning. Earlier this week, traders had largely brushed off a batch of letters in which Trump effectively delayed his tariff deadline while outlining new rates targeting over a dozen countries. Plus, sticking with trade, President Trump sparking chaos in metals markets by indicating the U.S. would implement a higher than expected 50% tariff on copper imports. The president's comments sparking a record one-day spike for copper, which hit an all-time high before falling more than 4% in early trading today. And it's Kevin versus Kevin. As investors await FOMC minutes this afternoon, the battle to be the next Fed chair is heating up. And according to the Wall Street Journal, Trump's economic advisor, Kevin Hassett, is emerging as a serious contender to be the next Fed chair, threatening former Fed Governor Kevin Warsh, who was an early favorite for the job. Some people close to the president worry that Warsh won't be a champion of lower rates. That's according to sources familiar with the matter cited by the Journal. Let's get a check in on stock futures right now. We do have a little bit of a lift here across the board this morning, but really in recent days, we've seen a little bit of volatility. Yesterday, little changed as investors tried to weigh what was going on with tariffs. We're going into earnings season, and of course now with the headlines heating up about who could be the next chairman of the Federal Reserve, all three major averages right now pointing to some modest gains at the open. Let's turn now to our top stories of the day. First up, President Trump teasing more trade letters due as soon as this morning. We're going to bring you the latest and the market movers to watch as he ramps up copper tariffs. Plus, the battle to become the next Fed chair is heating up as well. And hint, they're both named Kevin. Joining us now, Washington correspondent Ben Warsh, senior reporter Ali Canal live from the NASDAQ, and our Federal Reserve correspondent Jennifer Schonberger. Ben, let's start with you. Today was going to be Liberation Day 2.0 or something. July 9th was supposed to be the tariff deadline, but now it's pushed back. We're waiting on updates for 7 countries that the president says are coming today in terms of those letters. What do we know right now?
Yeah, for sure. This is the date we've had circled on our calendar. I've had circled on my calendar at least for weeks and weeks now with this deadline. But when Trump moved the deadline to August 1st earlier this week, it really shifted the focus to the end of this month and the beginning of August. As you mentioned, what we're watching for in the coming hours new trade releases from the president, at least 7 this morning and an additional number in the afternoon that Trump has promised. The question here for the day is essentially, is this going to be another slew of letters like we saw on Monday? We saw 14 of these letters with the president simply saying this is what your rate is on August 1st. Or is there any signs of progress on the deal front? India and the European Union remain very much central to this deal question here. And that's the question of what we're watching for, is whether there's going to be any progress with those trading partners here. I've been speaking with a lot of trade experts this week, and the dynamic here remains the same, which is that Europe and India are on a path to a deal, it seems. There's a lot of give and take there. There's a lot of ways for both sides to negotiate here. So there seems to be progress from it. The issue is that this moving of the deadline on Monday has really kind of sapped the energy. We still may see deals this week, but it's sort of sapped the energy for finalizing a lot of things this week. And it's pushing ahead to August 1st. That said, what that means for markets, I think, is a lot of uncertainty on this front for weeks and weeks ahead. A fresh quote overnight from Europe, I think, kind of encapsulated things nicely. The European Commission president was speaking to the European Parliament, and her summary of talks were that things are going forward, they're still pushing forward, but we're going to be, quote, we get ready for all scenarios. So that's sort of where we stand on the trade front at the moment.
I think that encapsulates all of us, Ben, in this moment and has really for the past 6 months or so. But in the meantime, Ali, we got a reminder. We were talking with Ben yesterday about the possibility of sectoral tariffs. And of course, yesterday, the president floated the idea of this 50% tariff on copper. And the ripple effect was pretty immediate in the market. And we're still kind of seeing the aftershocks of that this morning.
Yeah, we had the immediate impact on those copper prices. At its highest point, we were up as much as 17%, which was reportedly the largest single-day price surge in records dating back to 1968. We settled the trading day just under 10%. But we're seeing prices down slightly this morning. Just for some context here, though, copper affects everything from building your home to building out data centers. And while the U.S. mines a decent amount of copper domestically, that's actually been concentrated in Arizona, we have seen imports on the rise here, particularly when we look at the Americas. So Chile, Peru, Canada, they make up the top 3 importers there for copper mining. Now, in terms of sector reaction to this news, home builders haven't reacted too much. We saw shares of Lennar, D.R. Horton, Toll Brothers, KB Home all ending Tuesday's trading session in the green. And that's interesting considering higher copper prices would mean higher input costs for these home builders at a time when they're really struggling to ramp up and have that sentiment be positive in the wake of all this economic uncertainty. It looks like most of those names are trading relatively flat in extended hours. I believe Toll Brothers is up around 2% shortly before the opening bell. But I also want to check on U.S. mining companies like Freeport, for example. This is based in Arizona. We're seeing shares rise about 1% in futures trading, and this isn't really a surprise since higher copper prices would mean higher revenue and higher margins for these types of companies. Southern Copper, meanwhile, saw shares dip on Tuesday following the news, but the stock had been up about 10% on the month coming in to yesterday's close, and we're largely unchanged here in extended hours. Ultimately, we still don't know when these tariffs will be in effect, and Goldman Sachs had a new note out saying that it's still possible that maybe this is just a negotiating tool for the White House. I do think markets are pricing in a higher chance of seeing those 50% tariffs on copper. But again, we just don't know, especially since we've seen the taco trade at work in this market.
At the same time, I know that you've been looking through some of those strategy notes and some of those economist notes, Allie. And, we've also talked to other economists in the recent weeks about all of this. And there is this assumption that whatever the individual country's rates are going to be, that the overall tariff rate, the average overall tariff rate on goods coming into the U.S. is going to be higher, right?
Going to be higher. JP Morgan says that they see the tariff rate settling in the mid to high teens. And because of that, that's going to weigh on growth and boost inflation in the second half of the year. Now, Goldman Sachs dug into how the consumer has handled these tariffs so far. And only a small portion of tariff costs, about 6 basis points, has shown up in consumer prices here. And that's despite the rise that we've seen in the tariff rate. Now, there's a variety of reasons for this. One being the fact that foreign exporters, mainly China, have absorbed around 20% of costs by lowering some of those prices. U.S. consumers are currently shouldering about 40% of that tariff burden. And compared to the first trade war, that was about 70% 3 months after the announcements were made. But we are still seeing these warnings that we could see further deterioration down the line. And tariff pass-through is lagging at the moment due to delayed implementation. We saw a surge in front loading and also delayed payment systems. So Goldman Sachs is anticipating that this pass-through will accelerate, and they're projecting core PCE inflation could rise by 1 percentage point by year end. So that's those upside risks to inflation that we've been hearing from a variety of economists.
Yeah, and we're going to talk much more about all of that with Wendy Cutler of the Asia Society at the top of the next hour. Jen, I got to get to you on this Kevin versus Kevin situation that the Journal is reporting on. As we know, the president has repeatedly expressed his dissatisfaction with the pace of rate cuts and that they are not happening. And now the Journal has this new reporting that the sort of field has been narrowed. But as we know, it could change once again.
Yeah, I mean, a White House official told me weeks ago the president has the right to change his mind. And right now, it seems, according to the Wall Street Journal's reporting, that Kevin Hassett, the current chair of the Council of Economic Advisors, appears to be the favorite at the moment. I want to stress again, at the moment. Apparently, he met with the president twice last month and expressed interest in the position. The thinking in one scenario is that perhaps Hassett could replace Adriana Kugler, whose term is going to be up in January, put him on the board, see how he performs versus two of the other governors who are also in the running, Mickey Bowman and Chris Waller, both of which have shown a proclivity to cut rates. They're measurably more dovish than the rest of the FOMC. And then, of course, we know that Kevin Warsh is also in the running, and so is Treasury Secretary Scott Bessent, who's also sort of managing the process. And all three of these individuals, we've seen them go from at the beginning of the year sort of saying, we're not going to comment on Fed policy, central bank independence. We want to keep that intact, to changing to the Fed needs to cut rates right now. So all three of them seem to be jockeying for that position. We'll see how things go as the interview process continues and how the year unwinds, depending what happens with the economy and what the Fed actually does do. And also today, Julie, we're going to get Fed minutes out this afternoon, but I do expect that those are probably going to be stale. They're always released with a 3-week lag, and I would expect that we would continue to see more discussion about we want to wait and see what the impact of tariffs are and inflation as we go through the summer months. Back in May, majority of the committee, in fact, I think almost all officials had said that they see a risk that we could see longer lasting inflation, more persistent inflation from tariffs. So we'll see if that is the case again this time around. I would expect it to be so.
Yeah, we'll be watching them regardless and watching this continued reporting on what's happening at the Fed. Thank you guys so much, Ben, Ali, Jennifer, appreciate it. Well, Merck will acquire Verona Pharma in a deal worth $10 billion. The company is confirming this morning. If approved, the deal expected to close in the fourth quarter. Here with more, Yahoo Finance senior reporter Anjali Kamlani. And for many of these big pharma companies, the name of the game is patent cliffs and sort of mitigating the effect of those patent cliffs. So how does this acquisition do that?
That is exactly why we're focusing on this, Julie, because we know that Merck has been facing that. So this acquisition of Verona will add to Merck's portfolio of products targeting chronic obstructive pulmonary disease in adults. And this $10 billion deal represents the third largest in recent years for Merck, which is on a shopping spree to do just that, fill an anticipated decrease in revenues by the end of the decade when Merck's blockbuster cancer drug Keytruda goes off patent, to your point, Julie. And Keytruda accounted for about $30 billion of the $64 billion in 2024 revenues from Merck. So this is why it's a big deal. Merck has had, cash to spend $30 billion on hand last year, almost doubling from 2023. So, it's been sitting on a chunk of change recently. And with this deal, Merck has spent close to about $30 billion in larger deals to date, 2 others in 2021 and 2023. Now, Verona's key contribution is Ohtuvayre, a nebulizer or inhaled treatment that contributed $42 million in revenues in last year, and that's after approval in August. So that's just 4 months of sales, and so you can calculate that out for a year's worth. Definitely a blockbuster potential there. Analysts are predicting that this drug has the potential to take 20% of the COPD market shares, with peak sales of about $20 billion. So that's why it's such an appealing buy for Merck here.
So we're watching that specific deal, but of course, in the background, in the backdrop, we still have the threat of potential pharmaceutical tariffs. President Trump saying they could be as high as 200%. You and I have talked about this before. They're not actually going into effect yet. This is just him kind of floating it again. But what are you hearing from analysts, from the pharma companies, et cetera, about what they could look like and what effect they would have?
Yeah, as you just saw on your screen, President Trump did recently tell reporters that they're going to be tariffs at a very high rate, quote, like 200%. And this last part is actually the most important. We'll give them a certain period of time to get their act together. And so he's saying that the potential of the tariffs could be delayed by a year or a year and a half. That's according to several reports. We've also seen analysts talk about the idea that, of course, this 200 number is pretty high. It could be walked back, and that's just a threat. To your point, we've talked about this before, Julie, the idea that these companies are already doing a lot to bring manufacturing onshore and have committed more than $200 billion in the next several years. So that is contributing to, this sort of delay that you're seeing and is likely to continue. Most analysts don't believe that it is going to go in at 200%, if at all. And we're going to see which companies do end up resulting in any kind of tariffs at all. I've seen some notes from analysts saying that, we're probably going to see another round of congratulatory messages to some of the companies that have done a good job, some of the larger big pharma companies who have been onshoring in the recent past. So stay tuned, as always.
Yeah, and the way this market works, if it's not 200%, even if it's 100%, then maybe the stocks will rally. Who knows, given the way that the expectations management has been going on. Thank you very much. Appreciate it. Coming up on Morning Brief, we count you down to the opening bell on Wall Street with stocks set to open in the green. All that and more coming up on Morning Brief. Now time for some of today's trending tickers. We're watching Mobileye, Meta, and Starbucks. First up, Mobileye, as Intel plans to slash its stake in the autonomous driving company. The chip giant planning to sell 45 million shares. That's worth about $900 million. Mobileye will repurchase $100 million worth of its own stock directly from Intel. The sale comes as the company also reported preliminary second quarter results that beat expectations, and the share sale, we should say, is not entirely unexpected on the part of Intel. Next, Meta taking a minority stake in the world's largest eyewear manufacturer. According to a report from Bloomberg, Meta bought about a 3% stake in Ray-Ban maker EssilorLuxottica, worth around $3.5 billion. And Meta is reportedly considering further investments as it deepens its commitment to the smart glasses industry. Finally, Starbucks China business attracting offers for a potential stake sale. According to CNBC, current proposals value the business between $5 and $10 billion. Starbucks reportedly in the process of evaluating the offers, but a deal is not likely to be completed this year. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, President Trump injected chaos into metals markets, hinting that higher than expected 50% tariffs would be implemented on copper imports into the U.S. Those comments sparked a record one-day jump for copper. It hit an all-time high before falling in early trading today. With more on how to play this whipsaw and the effect, I'm joined by Carly Garner, commodity broker and analyst at DeCarly Trading, a futures and options brokerage firm that specializes in commodity options trading. Carly, it's great to have you here. I'm really glad to get your perspective on a day like this when we're coming off of this huge move in copper. So what do you make of it now that we've had, a little time to digest this move and what we could potentially see going forward?
Well, there's obviously a little bit of shock and awe yesterday. Yeah. I've been doing this for over 20 years, and I can honestly say, I tell my clients all the time, copper's a market that can get out of control. So always, if you're going to participate in it, keep it small, keep your risk in check. But I've never seen anything quite like that. That was really unprecedented. What happens going forward, I think, is going to be uncertain in the short run, because obviously the market's digesting a lot of things. But going into the news yesterday, and even in the aftermath, despite the volatility and despite everything that we've seen, in the bigger picture, I think copper is probably topping out as opposed to breaking out. I know the chart says we probably broke out, but it took some pretty stunning news for that to occur. I think we ran a lot of stops. I think we spooked a lot of traders. But the reality is the US dollar, which has been just completely battered down over the last 6 months, or maybe 5 months, but you get the point. The US dollar is most likely going to find some sort of bottom, even if it's just temporary. I think it could be a pretty severe rally in the next handful of months in the US dollar. And the reason I say that is if we're taking Trump point one as our guide, which I am, we've seen almost the exact same price action in the dollar this time around as we did during the first Trump administration. And lo and behold, we're actually approaching some pretty good monthly chart support in the US dollar. In addition, we have what I believe is an overcrowded trade. I think everybody's short the dollar and complacent in that mindset. And so I think we're due for a nice rally in the dollar. And if that's the case, with or without tariffs, copper probably eventually starts to give back a lot of this rally. So I'm bearish even after yesterday's reaction. And I will be 100% honest, going into yesterday, we were short and it looked good in the morning, and then suddenly it didn't look so good, later afternoon. But we're adjusting and we're hedging, and I think we could ride it out, but we'll see. But I wouldn't be, if you're not in copper and you don't want to be short or bearish in any type of way with options, probably stay out. If you're probably too late to the party for trying to buy.
Yeah, and you never know, obviously there's headline risk also in either direction. In general, we have seen commodities collectively come off their highs, right? But still at sort of relatively elevated levels versus a year ago. But what kind of signals are commodities as a group sending?
When I look at the commodity sector, take out the livestock, which is at all-time highs and honestly just shocking us as far as normal commodity action. It's kind of defying the odds. And you take out the metals, all other commodities are at or near multi-year lows. So, we're not talking about it a lot, but the commodity market is actually signaling deflation, not inflation. There's a lot of things that we have to work out of the system, and I think this is going to be a very long process. But as I just mentioned a few minutes ago, I believe the U.S. dollar is bottoming. I know that's not a popular opinion, but I think when everybody thinks the same thing and everyone's positioned for the same thing, usually the market surprises us, and I think that's what we're going to do. The reason I bring that up is if the dollar does bottom and rally, it's bearish for almost all commodities across the board. If I look at some of the correlations, for example, the metals, particularly copper and aluminum, are trading at a negative correlation with the dollar about 87% of the time over the last 30 days. When I look at the stock indices, I'm seeing them trade in the same direction, the opposite direction of the dollar, about 85% of the time. So if the dollar does rally, it's going to put pressure on most commodities, probably the stock market. So we need to keep an eye on the currency markets because things can surprise us, especially during during the summer months.
Yeah, and just quickly, Carly, let's dig a little bit more into the equity market, right? Because you talked about the dollar trade also being crowded. How crowded do you think this sort of bullish equity trade is right now?
Well, it depends on the metrics you're looking at, but what I try to pay attention to is market sentiment. And when I look at, X or social media posts and other forums, and I talk to people, I talk to a lot of retail clients for a living, and I can say that most people have gotten right back into their comfort zone and they're probably complacent, which worries me. When, during the April kerfuffle, when the market was down sharply, a lot of people were complaining. A lot of people were losing sleep. They talked to me about it. I hope that they're doing something different this time around because we're being given a mulligan. The market very rarely gives us a second chance to react to things differently. So here we are back at all-time highs. And I'm not saying the world's going to end. All I'm saying is everybody's long, everybody's bullish, everybody's too comfortable. And when you get a scenario like that, especially when we're coming up against technical resistance areas, when I look at the NASDAQ or the S&P charts on a monthly basis, we're coming right up against some pretty significant trend lines. RSI, which is the relative strength index, tells me we're overbought. But the interesting thing about the RSI is on a monthly and weekly chart, we're showing divergence. And what that means is as the futures markets are making higher highs, the RSI is making lower lows. This doesn't mean the market turns around tomorrow, but this means that this is probably an unhealthy and unsustainable rally at some point. I wish I knew exactly where that point was, but the advice I'm giving to my clients is this is a time to reassess your risk. If you were losing sleep in April, do it different this time. Maybe it means allocating different, switching from risk assets to tamer or risk off assets, or even hedging. The options and futures markets were created for hedging purposes. That's what we do for a living. There's really great ways to hedge using options. I'm going to keep it as simple as I can with a complicated strategy. You can put things together like risk reversals where you sell call options and you use the proceeds to buy put options. And what it does is it gives you the ability to make money on your portfolio up to a certain amount, but you're using the market's money to purchase your insurance just in case something goes south. So there's lots of things you can do if you're creative. Don't try to do this on your own if you don't understand it, but talk to a professional.
Carly, thanks so much. Appreciate it.
Yep. Thank you.
That does it for Morning Brief. Stay tuned for Opening Bid. That's next.